Hi, thank you first of all to Wholesale Investor for this opportunity of presenting today. My name is JD from Sales Director Central. What I want to do in this presentation is share some of the findings that we see in the marketplace with startups that get into scale up. So we work with founders and invariably technology companies that are between $1 and $20 million. And it's important for the one because if you can sell it, we can scale it. We come in and we have a process we have called PAMAS, which enables an organization to create a framework for sales. So why do we do this? Our purpose is that we want to change the way the world views sales. So we want to make the world a better place. And our mission is to help founders sleep at night by realizing their revenue dreams. The reason we came up with these two things, particularly the founders, is that what we saw with a couple of founders was they weren't actually sleeping at night. They were super concerned and worried about revenue. And so it kind of seemed to make sense. So our mission and purpose is to change the world and help founders sleep at night. What I want to get done over the next 29 minutes is really stimulate some of your thinking around how you go about selling currently, give you some actionable ideas and tips of things you could be doing differently. But I really want to make sure that what we're doing is completely customer centric. We spend a lot of time working with founders, much like you, and what we see is a really recurring variety of things consistently. So the first thing we do when we get engaged with a client, we come in and do a blueprint. And a blueprint is where we're looking at the organization kind of from start to finish of an engagement with a customer, how you write your proposals, presentations, etc. And then we come back and make a series of recommendations and provide some insights. From those blueprints, we see a really consistent series of things that we then have some of our team, some of our mentors going and implementing. We're going to look at product versus problem. Most organizations have a very product-centric website, and we're going to talk to that. Then we're looking at risk versus price, some research in the marketplace. We're going to look at the things that we really often see and what you can do about them. We're going to talk super briefly about our mousetrap, which is called PAMAS, the thing that we sell. And then there's a giveaway at the end. So if you want to get some more of our time, you can engage us and we can have a 30-minute conversation with you around that. So the product versus problem is a really interesting paradigm shift for a lot of our clients. If you think about your website right now, 90% of the websites we see are very product centric. Here is the feature function capability. Here are the things that we do. Here's our price list. Here are the customers that maybe we serve. They're very product centric and they're very, very much making sure that someone who's come to the website understands where they're at and that they need this functionality and problem and capability. What we want to do is shift your focus is what is the problem you solve? Are you really clear on what that problem is? And how do you talk to that problem? What is the insider's view from your knowledge of the marketplace? And we can then start asking questions, which we do in prospect meetings like, do you have these problems, issues, concerns? We see this all the time. And even just making that statement, we see this all the time, certainly gives our prospects some comfort and confidence that we know what we're talking about. The next line we typically use is the reason is, and I'm going to share some of these with you in a moment, but what problem do you really solve? What are the 2 or 3 problems that every one of your customers have that you can then address? And how do you make sure the website reflects and looks like that? We recently had a prospect who came to our website and he gave me some really interesting feedback when he replied to an email we'd sent saying, when I looked at your website, it really resonated with me. We weren't talking about the things that we sell. We talked about the problem that he has and some of the issues and concerns he might have around that. So let me share some of these with you as we get into the presentation. So as a founder, one of the things that we talk to, have you hired and fired a salesperson? It's a really key point for us. If an organization hasn't hired and fired, our chances of winning that organization drop. If they have hired and fired, then they know that it is a very costly exercise, and typically they're not sure exactly how to deal with that the next time. If they have hired and fired 2 to 3, we've heard up to 5 or 6 people. It's a very costly exercise. So what we say to organizations that have done that is there's 3 reasons why that's happened. Again, we see this all the time. You look in the wrong place for the wrong behavior and then you leave them. So let me explain what I mean by that. You look in the wrong place, you look on any job board, you advertise for a salesperson, and as we talked about before with frameworks, anyone in sales is probably someone that doesn't really relate to you. You're more probably a technical person, a consultant, someone understands more about the thing that the problem we're solving. So any salesperson will do, right? Wrong. They're looking for the wrong behavior. So look on any job board. What we want to be doing is get someone who's got experience selling and have them come and join your organization, because that person's got a better chance of success. Wrong behavior, what does that mean? The behavior that we're looking for in a salesperson is not the talker, the blagger, the person who can speak underwater. It's a person that I'm going to say is business curious. So they're really intrigued about an organization, the problems they have, who has the problems, how do they want to solve them. They have a general curiosity around those things, and that helps them uncover a whole bunch of information about the customer and why they're going to make a buying decision. And then the last problem with that is they leave them to fail. You hire a salesperson, and at some point, you go to them in the 3-month or 6-month mark and say, where is the pipeline? Where are the deals? It hasn't worked. And then you rinse, repeat, you do that again. So that's the base problem and issue that we solve with a lot of organizations. If you've hired and fired, as I said, high chance that you fit our market really well. Next one is you've hired a PR firm and you think that increasing leads is all you need to do to start selling your product. And it's very much a build it, they will come. You've built it and they haven't come. Marketing or PR tend to work, certainly PR, on good case studies of examples of things you've done really well. And just by throwing the name out and saying, hey, we have this great technology, it actually doesn't solve it for most people. Sales is a dirty word. Pipeline isn't trusted, and deals slip every month. Now, do deals slip every month for lots of different organizations? Absolutely. But when you're a smaller company, and getting that deal across the line is really vital to your existence, then having deals slip constantly, which tends to be most of our clients, they tend to go on what we call gut feel or he said, she said. So when we look at sales meetings, the 2 or 3 people, they tend to say, this is what I did last, this is what I'm going to do next. What it doesn't do is it doesn't promote a deal properly enough in your process. It doesn't allow us to understand enough about the customer, and then, as we said, promote the deal moving forward. This is a big one for a lot of founders. Every founder is time poor, ridiculously time poor. You've got distractions with every other part of the business, and sales is either something you put little time and effort into, or almost no time and effort into, because you're trying to manage every other part of the business. Customer is unhappy. Someone hasn't turned up today. Paying bills. All those things that come into play. So again, a lot of things we see with all our clients is super time poor. Because of lack of revenue, they're chasing any deal that's non-core. And so what they do is they start to getting away from the reason they actually made this product in the first place, and getting into an environment where they're just trying to get any revenue, and they try and make the product fit any particular process rather than understand exactly go back to the tours of this is why we did it, and these are the things that we're going to start to do. And then it's a really big one, trying to be the smartest person in the room. They try and be we have this product that no one's seen before, or that we have, we look at this differently the way everyone else has. And the problem with being the smartest person in the room is it extends sales cycles. And I'm going to show you that on a graph in a moment. So they do too many demonstrations over and over and over, because they've not only tried to be the smartest person, but they've got what I call a victim mentality. We need to prove ourselves all the time, rather than say to someone, we understand your business problem. We understand how much that problem is costing you right now. And we also understand what you need to do in order to make a buying decision. that puts us in a lot better position than doing 10 presentations potentially to people who just may not buy at any stage. So this is a graph. I've showed this graph quite a lot. I really like what it starts talking to. There's on the y-axis is level of buyer's concern. So at the top of that axis, the buyer is really concerned. Down the bottom of that axis, the buyer's not concerned. There's a timeline with 3 time segments in it. In the first time segment, we're in solution development mode. That's when the customer's really worried about their solution and the requirements that they have. And we tend to send our people out. Salespeople go and visit them, maybe even pre-sales people. We send people to understand a little bit about what they do and help them with their solution development. In the middle slice, we're evaluating. So the customer is doing their evaluation and we look at our product, our service, our offering, our capability. So they're evaluating the software and we show them fundamentally the things that we have. And in the last time slice, the customer's looking to make a commitment and they look at our company. How long have you been around? What is the product roadmap? What does the longevity of this relationship look like? So with those 3 time slices, I'm then going to map 4 components. And I guess what I want you to really get out of this is where does the product and the solution fit compared to risk and value and other things that I've talked to already. So the first one is need. So the customer's concern or the buyer's concern about their needs is reasonably high. It grows and then it dies down towards the end. It goes up in the beginning because the customers, they understand that they've got a problem and they're coming to market, but they're still developing the solution or they're developing the problem and issues and challenges they have. And then it dies down towards the end because quite frankly, at the end of a cycle, they're no longer worried about whether the solution is going to work or not, because during the evaluation of solution development, they've had all that thinking come to play. The next component is cost or price. Cost starts out about halfway up. It dies down in the middle and it becomes more prevalent towards the end. So if you're talking to an organization and they're not talking about price, what it might say is you're in the evaluation phase. Typically, we see in the marketplace, people very price-centric and price-focused. And in fact, I do posts on this topic quite often on LinkedIn. The mechanisms of price is only really a factor if all the other components in the deal are even. I'm going to get to talk to price a little bit later in terms of uncovering some of the value. The next component is solution. Solution is your product, your offering, your capability. Customers not concerned about your solution when we typically do demos far too early in discovery discussions. Solution starts out lower, then they're focused on cost, then they're focused on needs. So they're really focused when we talk to someone at the beginning of their cycle on what are our needs and do we really understand them properly. Solution is ways down. In the middle slice, obviously while they're evaluating, our solution is the thing that they're worried about the most or concerned about. So our solution goes from quite low to up high. And then solution and need, really interesting on this graph from the TAS group, finish off reasonably low. So ultimately, and again, I say this in a lot of the posts that we do online, no one wants to buy your product, which sounds very damning and damaging, but no one wants to buy your product. The people that make buying decisions all have a business problem or risk they're trying to mitigate. So let's try and understand that risk and then deal with it. So if you look at risk starts out really low because early on, when you're sending your people out, there's no risk to their organization. They're not worried about necessarily any part of that process. Towards the end, risk becomes the #1 component, almost twice as important as price. And with risk, I'm going to put value along the same line. So if you're thinking about all the accounts in your current pipeline right now, the organizations you think that are going to make a buying decision, I've got a question for you. Do you understand the risk to their organization if they do nothing? I'm going to say it again. Do you understand the risk to their organization if they do nothing? And if the answer to the risk to their organization is nothing, then they're probably not going to make a buying decision. So risk starts out reasonably low. Good time to start asking about what is the risk in terms of your evaluation, what is the risk to your organization if you do nothing, and a series of other questions that we would look to answer. as I said, it grows towards the end, it becomes the biggest driver. The reason why 90% of deals that slip is we don't understand their risk and or we haven't mitigated it properly or effectively. What we typically have done is spend too much time focusing on our price and our product, not understanding the drivers from the customer, which really is fundamentally the one thing that Sales Director Central focuses on during any engagement. If you want to get a copy of this graph, shoot me a note, my details at the end, happy to send it to you. It's from an organisation called the TAS Group. They've interviewed several thousand people and they've come back with this research. As I said, I really like it because it really puts in my mind these four components in with a good filter of it's really not about your product, it's not about your price, it's really ultimately about understanding risk and business value. So what is the only thing we measure in sales? And I asked this, and it's a bit of a coy kind of question. Most people, 99% of people are going to say the only thing we measure in sales is time, but it's not. Is revenue. It's not revenue, it's time. Stop wasting time. If you spend more time in front of a prospect that has to make a buying decision, they've got a compelling event, they've got business risk that if they don't mitigate it, they've got a massive issue that they're going to have. If you spend more time in front of those people, you'll probably sell more and or make your target. If you spend time in front of people who like your software, but don't have the right risk profile, don't have a compelling event, then you're less likely to make your target. Let's spend our time with people that have to make buying decisions, because ultimately, as I said, that's the thing that's going to get us across the line and give our growth and give the shareholders potentially the returns that they're looking for. So what do we see in the marketplace when we come in and do a review with someone? The first one is that there's no sales methodology. There's no established process for figuring out how to invest in, there's no established process for the customer's information to be gleaned. So the sales methodology could be solution selling, target account selling, spin, RSVP selling, Sandler. There's 30 that I listed the other day. You need one. Could be BANT, Strongman, Medic. There's so many different sales methodologies in the marketplace. Find one that suits your business and implement it. And the reason why is because the gut feel, he said, she said conversations around what you did last and what you're going to do next that we've talked to, ultimately that doesn't drive a discussion, doesn't drive a buying decision within your clients. Sales methodology is going to give you another framework of looking at consistent customer data and deciding what you need to figure out next or the questions you need to be asking to drive an opportunity. So that's a really big one. That's our number one thing that we do and implement. We put in a sales methodology to all the clients because it's just going to uplift everything very quickly. The next one is the website is product-based and not business problem. We've talked to that. But everything you do is product-based. Your proposals are product-based. Your presentations, understandably, are product-based. But everything looks and feels like a product and a price. What we're not doing enough of is focusing on what the problem is and what is the cost to their organization if they do nothing. So if you like, helping that internal person within the customer, within the prospect, get a consensus of change, helping them drive, if you like, a business case to get approved depending upon the size and scale of the product you're looking to sell. So how do we get prospects to better understand what the problem is they've got and start to quantify and qualify what that looks like for their organization so they can get that internal consensus of change? I've talked about proposals and presentations. 99% of the presentations and proposals that we see are all about us, our company, our product, why we did it, our price, our implementation, other customers. They're all about us. And here's the thing I want you to think about with proposals. Can a prospect get your proposal and say, here's what we want to buy and send it more internally? The bulk of proposals are too much about us. They don't identify the problem, the issue they have, how much it's costing them. They don't spend any time focusing on that. So the proposal you give a prospect is going to be reworked if they're actually going to go and look to get the business case approved, if you like, and it's going to be put in a different format. Let's write it in that format anyway, and or ask a prospect. So I'm going to give you a challenge other than the website one. For the next time someone asks you for a proposal, and please get them to ask you, don't say I'll send you a proposal, because that's our process, not theirs. Next time someone asks for a proposal, I want you to ask a question. Firstly, thank you for asking me for a proposal. What exactly do you need in it in order to get a buying decision? So I'm going to say it again. What exactly do you need me to put in this document in order to get a buying decision? The only reason we write proposals, team, is to get a buying decision from the organisation. So why don't we understand more about what they need and then talk and deal to that component? It's interesting, if you're talking to someone who is a low level person in the organisation, they'll be less likely to understand what to put in the proposal. You're talking to someone higher up, they hopefully will have a better understanding of how they're going to get approval to spend CapEx or OpEx, capital expenditure or operational expenditure, with your organisation. Presentations, similarly. Most presentations that we see are very focused on what we do and who we are, rather than the customer, their problem, how much it's costing them without solving it. And then maybe other customers that have exactly the same problem and how they've solved it. So have a little bit of a different filter on understanding the customer. The next one is what we call education versus qualification, or educating versus qualifying. What do we mean by that? Educating is when we want to go and do all these demonstrations because we're educating the client on how to think about the problem. Qualifying is where we use the sales methodology to understand whether they have to buy or not. I don't know about you, but certainly in my business, I don't want to be spending too much time educating the client base. I want to be talking to people around understanding their business problems, some of the reasons they have it, and some of the rationale behind the problem, but then talking to them about how they might solve that, rather than showing them feature function capability that really just gets us to a position of sending a product and price piece across the customer. So stop educating the clients on what we do, start qualifying them and using our questions and our positioning from a pain and problem perspective to drive that conversation. The last thing that we talk about is that most poor performing reps that we see, and I've been consulting now for 16 years, I've been doing this work for well over 5 years. Every poor performing rep knows two things. They know what they're going to sell and how much, and they're super clear on that. Well, the really bad ones don't know, but they know what and how much. What they don't know is why are they going to buy, when are they going to buy, and who's going to buy. So again, swap out the thinking you have of here's the product and here's the price, and start thinking about why they're going to buy it. Why does the organisation need to make a buying decision? Why are they going to buy us? When are they going to buy it? What is their time frame? And who's going to buy it? Who ultimately is going to sign off? And then start dealing with the risks to their business. So again, if you have those, if you have that switch, you'll start thinking about prospects really completely differently. So some of the things that we want you to start thinking about doing differently, and I've kind of touched on this a little bit, but stop talking about your product. If you stop talking about your product, what are you going to replace it with? If you're a founder, start talking about your passion, because your passion is the reason clearly that you started the business, but your passion is going to resonate with a customer because it will talk to the problem they have. And that's the reason why most founders actually do well in the beginning, is it's their passion that gets them across the line. The product certainly doesn't. And as I said there, no one really wants your product. So talk to more about why you're doing it, what the opportunity in the marketplace was, the problems that you saw and why you did it, and you'll resonate a lot better than here's the product that we created to solve that particular problem. The next part, and maybe unsurprisingly based on some of the information I've been through with you so far, is stop tracking the sales process. Stop tracking whether we've done a proposal or not, whether we've done a demo or not. whether we've had the discovery meeting, whether they've agreed. Stop tracking all the things that relate to us and start tracking the buying process. So how do you buy Mrs. Prospect? What are the processes internally? Do you have to go through procurement? Is legal involved? Who needs to evaluate and sign it off? Have you got a business case approved? Is there a budget already? There's a variety of things that we would look at differently if we were to look at tracking and understanding the buying process throughout the course of a deal. So really change that paradigm. If you've got a CRM that talks to the sales process, I implore you to change it and start talking about the buying process, because again, it's going to change your paradigm, the way you look at opportunities. And what we want to do is we want to create not a sales environment where we talk about product price. We want to create a buying environment. We talk about the business problem, the business risk. We understand the compelling event. We're going to be in a lot better shape to understand whether deals are going to happen or not at the end of the month, the end of the quarter. So what do we do when we go into an organization? I've already dealt with the sales methodology piece. We get organizations to get a methodology that is right sized for their business and implement it. As I said, I'm really ambivalent of which methodology it is, but make sure that it's a methodology which allows you to challenge, to stress test what we know about a customer. So I've seen methodologies in businesses where one particular one said we use BANT. And when we did the review of their business, what we discovered was that BANT was in the CRM and it was things that they checked off with, but it really wasn't part of any deal review. It wasn't really part of any of the process they did in discovery. So while they had a methodology, they weren't applying it properly. We want to stress test with a solid methodology. We want to stress test what do we really know about the customer and why are they really going to buy? Which brings me to my next point. What is the customer's risk? Do we really understand the customer's risk? So the good news with risk right now is, again, if you think about your pipeline and deals that you believe are going to come in before the end of this month, this quarter, this year, whatever the paradigm is, it's not too late to go back to that customer and say, hey, Mrs. Customer, really appreciate the engagement we've had so far. I'm not sure I completely understand what risk you're trying to mitigate within your organization. I think it might be this if you have an idea, or we haven't really dealt with that. How can you help me with understanding some of the risk components internally? It's never too late to have that conversation. It typically adds value to the relationship. It's not detrimental to it. Do regular deal reviews. The next point. Regular deal review is when you sit down and you make time to look at an opportunity and you go through a structured approach to figuring out, are they going to buy? What is their access to funds? What is a critical event? What is unique business value? And other phraseologies. What do those things look like from the customer's perspective? And I heard this in the last couple of weeks, not giving them incentive to buy. I wrote a post recently, in fact, this week, which talked about, is discounting killing your business? Too many people rely on the discount to motivate and drive a customer to go forward. A customer will just make that buying decision when they're right. And if you give them a discount, they'll take it and then apply it to their time frame. So do regular deal reviews. Make a commit. What do we mean by make a commit? Making a commit is around getting your sales people or people involved in the sales process to say, this deal is going to close in this time frame. Why do we do that? The more often you're able to commit and meet that commit, the better off you'll be with methodology, the better off you'll be with understanding the drivers from the customer, and you'll more generally create a discipline and a rigor. It's like a muscle. You create a rigor to understanding whether people are going to buy or not. If you can do that more effectively, you'll be able to better predict and therefore better know what revenue you're going to do and go back to the marketplace, to your shareholders, to whoever you need to, and enable them to see the growth potential of the business, which is a really big deal, obviously, in raising capital. And education versus qualification. Stop educating the marketplace. What we want to do is qualify opportunities as effective as we possibly can. So what do we do when we go into an organization? We typically come in and do, this is our mousetrap. We put the right planning in place. PAMAS is our paradigm or our framework for sales. So P is planning. What planning do you have for your overall target? What planning do you have on account plan level? Most organizations either have lack of it, or if it is there, it's not done in the right manner. It's more, this is the potential addressable market rather than this is how I'm going to make my sales target. A is for accountability. What is the accountability of the rep? What is the accountability of the organization? And how do we drive that? Methodology I've talked to several times. What are the KPIs? What are the right KPIs or indicators for your organization? Not what are the lag ones? What are the lead ones that are going to help us drive some more outcomes? What is the deal cadence? How regularly do we meet and talk about customers and their problems and their issues and how we might solve them? And E is for education, all underpinned with value. So if we implement PAMAS within an organization, we guarantee to increase their revenue, and we guarantee that we have more focus on not only risk, but also business value as we go through. So the question I have for you as I draw to a close is, what do you need to change within your organization? What are the things that you've got from this conversation based on the feedback we have, based on the data we have? What are you going to do to add value, to really add value to a customer? Because selling a product doesn't add value. The mechanism of adding value is really, again, measured by the customer, not us. So what are the things you need to do and change? And what are you going to do differently? So if you're excited about the growth and you want to get a 30-minute sales audit from some of the team at Sales Director Central, send some information, send either an SMS to my phone number, which is there, or my email on the screen, and we will do a 30-minute audit. As you may figure out, we're not going to do a sales process. We're just going to figure out how we can possibly help you. As we said to the original slide, our purpose is to change the way the world views sales. So thank you for your time. Enjoy the rest of the conference, and I hope to talk to you soon. Cheers.